let's take one more practical question. On 1st April 2012, these were the balances. So balances as on 1st April 2012, capitals 8,300, cash 8,200, stock 100. Next transaction, purchased goods from S rupees 1,000, sold goods costing rupees 800 for rupees 3,000, purchased furniture rupees 2,000, furniture lost by fire rupees 1,000, paid fuel rupees 500, closing stock as on 31st March 2013 rupees 300. So one thing is clear, it is an ongoing business because we have got the balances on 1st April 2012. Maybe somebody is running this business for last 1 year, maybe for last 10 years. Anyhow, we are not concerned with this thing when this business was started. But on 1st April 2012, these were the balances, capital, cash and stock. So when we make journal entries, I mean to say when we find out the debit aspect and credit aspects, we have to pass an opening journal entry on the opening date. And the journal entry will be cash count debit 8,200, opening stock debit 100 to capital 8,300. But I strongly suggest you, before you start the question, you must make opening balance sheet. I mean to say balance sheet as on 1st April 2012. So write down capital 8,300, on asset side cash 8,200, stock 100, and the total on both sides 8,300. And you should pass journal entry, I mean to say opening journal entry, on the basis of balance sheet. Now other transactions. The journal entry will be purchased goods from S rupees 1,000. So journal entry will be purchases account debit to S rupees 1,000. Then the next journal entry is sales for rupees 3,000. The cost of the goods was 800. You know, when we pass the journal entry for sales, we are nothing to do with the cost price of the goods. And number two, we are nothing to do with the profit made on sales. We are concerned only and only with the selling price. So what will be the journal entry? Let's go to the options. On debit side, debit all expenses and losses. Is there any expense or loss? No. Leave it. Then debit what comes in. Anything has come in? Yes, we have sold the goods and cash has come in. So you write down cash. Now come on the credit side. Credit or incomes and gains? No. When we sell the goods, there is no profit, no loss. Then credit what goes out. Anything has gone out? Yes, goods has gone out. So you write down goods. But you know, we cannot write down goods. Either we can write purchases or sales. It's a clear-cut case of sales. So we'll write down sales instead of goods. So on debit side cash, on credit side sales. So cash count, sales count, or we can say cash count to sales count. Let's go to the journal entries. What will be the journal entry? Cash account debit to sales count rupees 3,000. Now, purchased furniture rupees 2,000. We have bought furniture. Furniture is an asset for us and it has been bought or purchased on cash basis because it has not been clearly mentioned in the transaction whether it was a cash transaction or credit transaction. But if the question is silent and the name of the party is not given, what we assume? We assume that this is a cash transaction. So we have purchased this furniture on cash basis. So on debit side, debit all expenses and losses? No. We have bought furniture. There is no question of expense or loss. Debit what comes in? Anything has come in? Yes, furniture has come in. So write down furniture. Come on credit side. Credit all incomes and gains? No. Credit what goes out? Yes, cash has gone out. So write down cash. So furniture account on debit side and on credit side, to cash account. So what will be the journal entry? Furniture account debit 2000 to cash account 2000. And the narration will be being furniture purchased. Now, furniture lost by fire, rupees 1000. It's a loss, and this loss is due to fire. And what we have lost? We have lost furniture due to fire. So come to the options. On debit side, debit all expenses and losses. Is there any expense or loss? Yes, there is loss of rupees 1000. And what's the name of this loss? Loss by fire. Now come on credit side. Credit any incomes and gains? No income, no gain. Credit what goes out? Anything has gone out? Yes, we have lost furniture worth rupees 1000. It means we can say our furniture has gone out. It has not gone out, but we have lost it. That's the one and same thing. So you write down furniture. Means we have lost the value of furniture, or the value of furniture has gone out. You can say in this sense. So on debit side, loss by fire account, and on credit side, to furniture account. So let's make journal entry. Loss by fire account debit 1000 to furniture account rupees 1000. And what will be the narration? Being loss of furniture by fire. Next transaction, paid fuel. That fuel may be for some machines in the factory, that may be for some vehicles, whatever it is. We have paid 500 rupees. So what will be the journal entry? Fuel account debit to cash account rupees 500. In this way, we have completed the journal entries. And at footnotes, please write down closing stock as on 31st March 2013 rupees 300. One thing more, I would like to explain you about the stock. The stock in the shop or factory or whatever it is, it can be of two types, either opening stock or closing stock. Suppose on 31st March 2013, the closing stock is rupees 300. It means in the balance sheet, this closing stock will be shown on the asset side. That's a closing stock. But the same closing stock, I mean to say the closing stock as on 31st March 2013, it will become the opening stock for the next year. Means the starting of the next year. And the next year is 1st April 2013. So closing stock of rupees 300 as on 31st March 2013 will be equal to opening stock as on 1st April 2013. So in this question, I have taken the opening stock as on 1st April 2012, 100. It means this was the closing stock of 31st March 2012.